A blowout surprise. Employers hired workers at a blistering pace last month, adding 321,000 jobs. That's the most in nearly 3 years and significantly higher than the 230,000 expected for the last jobs report of the year. Adding more sparkle, employment gains in the previous 2 months were revised upward, and the unemployment rate held steady at 5.8%. All this came despite an economic slowdown at its trading partners in China and Europe. Long stagnant wages, which Fed Chair Janet Yellen watches very closely, rose much more than expected, up 0.4%. Conference Board economist God Lebanon says that could push Fed officials to hike interest rates as early as spring.
It certainly pushes it a little closer to the present. I think, with employment growth strong, with the unemployment rate declining rapidly, and finally we see wage growth starting to accelerate. If we have a few more months like we had in November, I wouldn't be surprised if the Fed starts raising rates in the spring of 2015.
The gains were broad-based. As usual, the lower-paying services sectors like retail and restaurants and bars saw big increases in payrolls. But in a positive sign, the higher-paying manufacturing and construction sectors gained momentum. On the other hand, the labor force participation rate that measures the share of the employed and those looking for jobs remained unchanged. Following the report, bond yields shot higher, so did the dollar against the yen and euro, and stocks opened higher.